This is Nightly Business Report with Sue Herrera and Bill Griffin.
Second half kickoff. Stock market gains are capped as trade concerns persist, making the start of the third quarter much like the end of the second.
In the crosshairs, why a small Ohio town finds itself caught in the middle of the U.S.-Canadian trade dispute.
Debit or credit? The answer to that may be digital. Those stories and more tonight on Nightly Business Report. It is Monday, July the 2nd.
Indeed it is. And we welcome you. Good evening, everybody. Tech stocks rallied late in the day to help the major indexes close higher on the first trading day of the second half and, of course, the third quarter. But concerns over trade lingered, putting a lid on those gains. And as one analyst put it, the constant threat of something worse is starting to take its effect on the market because there's no clear end in sight. And with that, the Dow Jones Industrial Average rose 35 points to 24,307. The Nasdaq advanced 57, and the S&P 500 was up 8. Eamon Javers is at the White House tonight with the latest on the trade tensions.
President Trump issuing something of a veiled threat to the World Trade Organization today on a day in which Canada announced that retaliatory tariffs have gone into effect against the United States. The Canadians put 25% tariffs on steel products, 10% on aluminum products, and 10% on other products, including yogurt, coffee, and ketchup coming in from the United States. At the White House today, the president was meeting with the Prime Minister of the Netherlands, and he had this to say about the World Trade Organization.
WTO's treated the United States very badly, and I hope they change their ways. They have been treating us very badly for many, many years, and that's why we were at a big disadvantage with the WTO. And we're not planning anything now, but if they don't treat us properly, we will be doing something.
Meanwhile, as the stock market was digesting all of this information today around the world, Wilbur Ross, the Commerce Secretary, was on CNBC early in the day, and he said that there was really no particular level in the stock market that the White House was looking at in order to change its tariff-related behavior.
There's no bright line level of the stock market that's going to change policy. The president is trying to fix long-term problems that should have been dealt with long time ago, weren't, and there obviously is going to be some pulling and tugging as we try to deal with very serious problems.
White House officials have told me two things. One is that the president has said again and again that he does want to get out of the World Trade Organization. Not clear how he would put that into practice, though. And then also, they feel strongly here at the White House that with the economy as strong as it is, even though the stock market hasn't been as strong, now is the time to make these moves that they're making in terms of tariffs and global trade. They feel like with a strong economy, the United States has the foundation that it needs now to make these moves, which they say will pay off in the future. For Nightly Business Report, I'm Eamon Javers at the White House.
Meanwhile, the largest American business group has launched a campaign to oppose the Trump administration's trade policies. The Chamber of Commerce, which is customarily a close ally of the Republican Party, says if a global trade war does break out, consumers will ultimately pay the price. In response, the White House says it is focused on leveling the playing field for all American workers.
Eamon, moments ago, mentioned the Canadian tariffs on American products. Well, one of those products is ketchup. And the trade fight is putting a lot of pressure on a small Midwestern town. Seema Modi is in Fremont, Ohio.
Canada's retaliatory tariffs take aim at a number of U.S. products. But it's the 10% import duty on ketchup that has the small industrial town of Fremont, Ohio, concerned. Right behind me is the nation's largest ketchup plant, which produces 2 million bottles of ketchup daily. In a statement, Kraft Heinz responding to Canada's tariffs, saying, "We are opposed to any change that impacts our ability to seamlessly move our products across these borders." Slapping tariffs on ketchup was highly symbolic on Canada's part. Not only does Kraft Heinz dominate 76% of the Canadian ketchup market, but the company closed a large ketchup factory in Canada several years ago to centralize production in the United States. And Ohio, where most of its product is produced, is a political swing state, which often determines who wins the U.S. presidency. And over 51% of constituents in the Buckeye State backed President Trump in 2016.
Heinz ketchup is a quintessentially American product.
Republican Senator Patrick Toomey from Pennsylvania, Kraft Heinz's home state, recently said the Canadian tariffs could have an adverse impact on Kraft Heinz and its products, warning that the tariffs could backfire.
The solution for them to be able to continue to sell their product in Canada would be to shut down their U.S. factory and move to Canada. Then they wouldn't be subject to these tariffs.
But residents of this small working town with a population of just over 16,000 say this ketchup plant is a big source of jobs for those who live here.
Heinz is a staple in Fremont. They've been here for years and years, as long as I can remember, and I'm pretty old.
It is the mothership of all Kraft Heinz's. It makes the most ketchup in the entire United States, so very big.
Experts say Kraft Heinz will have to make a decision soon on how to respond to Canada's tariffs by either eating the cost or passing it on to Canadian consumers, but the latter would be risky. Heinz is facing rising competition from French's, which has been marketing its ketchup as a made-in-Canada alternative to American-branded Heinz ketchup, even though French's parent company is headquartered in Maryland. And the strategy seems to be working. Online in Canada, a guide on how to avoid buying American products and opt for Canadian-made items is going viral. Topping the list, Heinz ketchup. The question now is just how much Canada's 10% tariff will impact demand for America's favorite red condiment. For Nightly Business Report, I'm Seema Modi, Fremont, Ohio.
Now, among packaged food companies, Hershey and Treehouse Foods could see the biggest impact from Canada's retaliatory tariffs. According to Credit Suisse, Hershey exports the vast majority of the candy it sells in Canada instead of producing there, as some companies do. Treehouse Foods will pay import tariffs on some products, but small changes in costs for Treehouse could have an outsized impact on its earnings because of its low operating margins. At any rate, shares of both companies finished the day trading lower.
And concerns about global manufacturing also kept stocks in check today. Activity in the Eurozone slowed in June and by slightly more than previously reported. Confidence among Japan's manufacturers weakened for the second straight quarter amid concerns about the potential impact from the global trade fight. And a private gauge showed growth in China's manufacturing sector slowed in June.
As expected, the State Department said today the U.S. is going to reimpose sanctions on Iran. The first wave, to begin in August, will target trade, gold, and the automotive sector and include the goal of eliminating imports on Iranian oil around the world.
Our focus is on getting as many countries importing Iranian crude down to zero as soon as possible. We are also working with oil market participants, including producers and consumers, to ensure market stability.
Add to that the suspension of oil exports from Libya and questions about Saudi Arabia's production, and you have a tug-of-war right now in the oil market. Jackie DeAngelis has more on that part of the story for us.
In a tweet this weekend on oil, President Trump said that prices were too high. He said he spoke to King Salman of Saudi Arabia and explained that the turmoil in Iran and Venezuela were causing him to ask the Saudis to, quote, increase oil production, maybe up to 2 million barrels to make up the difference. Prices too high, he has agreed, end quote. The White House backed off that position a bit later, saying that the Saudis could raise production if needed. But there were still many questions. Would the 2 million barrels be in addition to the 1 million that OPEC said it would add back? And did the king really agree? With no answers to those questions, oil prices retreated, but ever so slightly. Still, with the recent 10% spike in oil prices and the 4th of July this week, prices at the pump have been rising.
Gasoline prices, I think, have pretty much reached their peak, barring any major refinery disruptions for the rest of the summer. Demand has been flat and actually a little bit lower than last year at this time. As far as crude oil goes, I think crude oil could reach $78, $79 a barrel. I don't see $80 a barrel. I think there'll be some intervention if we see prices go much higher from here. I think that there's a seasonal factor involved in crude oil too, where after the 4th of July, demand is going to start dropping for that also.
Right now, AAA says the average price for a gallon of regular is $2.86. That's up 51 cents from this time last year. And they also say this week, more than 45 million Americans will travel more than 50 miles away for the holiday. That's a 5% increase from from last year and the highest number since AAA started tracking the statistic 18 years ago. The majority of those people will travel by car, almost 40 million. And they'll all be digging a little deeper when it comes time to fill up. But maybe prices will level off after the fireworks. For Nightly Business Report, I'm Jackie DeAngelis.
Well, drivers in 7 states will notice higher prices when they go to fill up. That's because gas tax increases went into effect over the weekend. Oklahoma's increase was the first in 31 years. The revenue will help fund pay raises for teachers there. South Carolina, Indiana, Maryland, Tennessee, Vermont, and Iowa also raised their gas tax as of July 1st. By the way, Nebraska moved in the other direction and lowered its fuel surcharge.
So joining us to talk more about the oil market and where he sees oil prices going is Rob Thummel. He's the portfolio manager at Tariffs Capital Advisors. Good to see you, Rob. Welcome back.
Thank you.
You make the point that we're entering a new era. Is that based solely on the geopolitical risk that's out there, or is there more to it than that?
No, Sue, it's more than that. We have an adequate inventory, an adequate supply of oil throughout the world. And the U.S. is a big contributor to that, right? Hydraulic fracturing, horizontal drilling has changed the game and allowed the world not to be concerned about running out of oil. Yes, we have oil prices rising right now, but there's an adequate supply of oil throughout the world. So consumers don't have to be concerned about oil running out.
Do you see oil prices going much higher at this point? And what will U.S. producers be able to do about that, do you think?
Yeah, so there's no doubt that the environment that we're in right now, Bill, that there's really little to no margin for error in the oil markets right now. Geopolitically, there are a lot of things going on. Saudi Arabia is being asked to really grow its production. And if you think about what's happening is you can't just turn on your water faucet, right? And Saudi Arabia oil ministers can't just turn the oil faucet and produce 2 million more barrels a day. It takes time and it takes a lot of effort and a lot of infrastructure investment. So we think oil prices potentially could spike, but ultimately they're going to come back down and be around $55 to $65 per barrel for an extended period of time. And as an energy portfolio manager, that's exactly where we want prices to be.
All right, so you gave me the entree into how do you invest against the environment that you just described, and you gave us some picks, one of which you like is Cheniere Energy, LNG is the symbol. Why do you like it?
Yeah, so Cheniere's really unique. So at Tortoise, what we like to do is like to skate to where the puck is going. And if you look at where's the puck going in energy, actually natural gas is really a critical commodity. It's an essential commodity, and Cheniere is right in the heart of this. So Cheniere Energy, what do? They export U.S.-produced natural gas, and they liquefy it, and they export it to countries around the world. Around the world, what's happening in the energy sector is emissions, carbon dioxide emissions are declining. Why is that? It's because consumers are using more natural gas and less coal to generate electricity. So as a result of that, Cheniere is well positioned to benefit from this.
All right, one more. Plains All-American, you're going for the pipeline company, not the oil producer. Very quickly, why?
Yeah, real quickly, Bill, that's an infrastructure company. It's building out infrastructure in the Permian Basin. The Permian Basin in the U.S. is one of the lowest cost producing basins in the U.S. and the world. It's an MLP. It generates a lot of income for investors. So if your investors are looking for income, Plains is a great place to invest.
On that note, Rob, thanks so much. Rob Thummel with Tariffs Capital Advisors. Bill?
Well, as you know, Mexican voters over the weekend elected the man who promised profound change as their next president. The victory of leftist Andrés Manuel López Obrador could pave the way for some progress on NAFTA renegotiations. Experts say the Trump administration's approach to trade appears to be in sync with some of López Obrador's economic priorities. For example, the New Mexican president says, as we've reported, he's considered to be more receptive to raising labor standards in that country. The very low wages currently paid in Mexico has enticed U.S. companies to move production south of the border.
It is time to take a look at some of today's upgrades and downgrades, and we start with the Dow component Walgreens, which was downgraded to neutral from buy at Mizuho. The analyst cites a lack of clarity on its strategy, negative investor sentiment, and a lack of near-term catalysts. The price target is 64, but the stock rose nearly 2% to 61.13. General Electric's underweight rating was maintained at J.P. Morgan. The analyst warns that GE's turnaround strategy will not lead to a higher stock price and that the stock's current valuation is too high. The price target is $11. The stock fell nearly 2% to $13.37.
Nordstrom's rating was cut to market perform from outperform at Cowen. The analyst there cites weak same-store sales at its brick-and-mortar locations, as well as slowing momentum at its discount division. Price target $51. Shares fell about 2% to $50.71. And shares of Wells Fargo were upgraded to equal weight from underweight at Morgan Stanley. The analyst cited the bank's recent passing grade of the Fed's stress tests. Price target $62. That stock rose 1.5% to $56.32.
Still ahead, will the stock market losers of the first half turn into the winners of the second? Well, the first half is over, and now trading in the second half is underway. And some investors want to know if the worst performing blue chips over the first 6 months of 2018 will make a run in the next 6 months. Dominic Chu takes a look.
The halfway point of the year does provide at least a little excuse to take stock and see if things are progressing the way you planned. For those that stick to the blue chip Dow Jones Industrial Index, it's been a tale of underperformance versus the broader S&P 500, and especially against the tech-heavier NASDAQ composite. Only a third of the Dow is actually in positive territory on a year-to-date basis. Walmart has been one of the bigger laggards, down around 15% year-to-date. The retail giant has been locked in a fierce battle with Amazon.com over where consumers spend their money. A big part of Walmart's story for the second half of the year will involve sales trends, especially online, including here in the U.S. for that all-important back-to-school and holiday shopping season. Analysts tracked by FactSet currently have an average target price that implies 13% upside from today's value. Another bigger laggard is a new entrant to the Dow. We're talking drugstore and pharmacy chain Walgreens Boots Alliance, which just recently replaced General Electric in the index. Walgreens has also been dealing with a changing healthcare and retail landscape due to Amazon and others looking to get more into consumer healthcare markets. That stock already down around 17% year to date. Analysts here think shares could rally 23% on average from current levels. And the worst performing stock in the Dow this year is 3M. The diversified industrial conglomerate has also lost around 17% in that time frame, with some investors focused on growth and its exposure to sales in China. Trade and tariff policy will have an effect on it and other large companies with significant business in China. One thing many experts agree on, factors driving market volatility could be here to stay for the balance of the year. For Nightly Business Report, I'm Dominic Chu.
Dell is about to be a public company again, and that is where we begin tonight's market focus. After a 5-year stretch being private, Dell said that it is planning to buy out DVMT. That's a stock that tracks the performance of Dell's subsidiary and cloud software company VMware. Investors of DVMT can either now swap their shares for Dell's Class C common stock or take a cash offer. Dell said the decision was made to help simplify the company's corporate structure.
In the last 5 years, a lot has changed. We've completely transformed the business, become the essential infrastructure company, really changed the profile nature of the company in terms of our capabilities, a broad set of capabilities. This is about simplifying our capital structure and exposing the value that we've created to shareholders.
Shares of DVMT soared by 9% today to $92.20. Tesla produced slightly more than 5,000 Model 3 vehicles last week, barely topping its own goal for that week. For the record, the company made 5,031 Model 3S's. The automaker now says it expects to ramp up production to 6,000 Model 3s per week by the end of August. Shares were initially higher on that news, but then traded lower as some analysts questioned whether the company can sustain that production rate. Shares closed down 2% at $335.07. Axiom is reportedly nearing a deal to sell its marketing solutions unit to advertising company Interpublic Group for more than $2 billion. Reuters said that the move will give Axiom the ability to focus on a division aiming to give companies better access to their data. Axiom is also said to be interested in selling its remaining businesses at some point. Axiom shares rose 14% to $34.21. Meanwhile, shares of Interpublic Group were off almost 2% to $23.03.
Shares of Wynn Resorts took a hit after revenue growth in Macau last month disappointed. Gaming revenue in Macau, which is a massive casino hub in China, has missed expectations for 2 straight months. Shares of Wynn fell nearly 8% to $154.14. And after the bell, the furniture retailer Herman Miller said a rise in orders across all divisions helped overall sales rise and top expectations. Earnings were also a beat, and the company raised its dividend 10%. Shares of Herman Miller were initially higher in after hours. They also finished the regular session up more than 1.5% to $34.45.
A new survey says more Americans are leaving their debit cards in their wallets. 74% of Americans used them in 2013, compared to only 58% today, as consumers now turn to credit cards and mobile payment options. Joining us right now is Kimberly Palmer. She's banking and personal finance expert at the personal finance website NerdWallet. Thanks for joining us tonight.
Thanks for having me.
I guess digital technology, it's more convenient. Sometimes it's more secure than what you can get with a debit card, yes?
Right. People are just finding that they have so many more options now other than debit cards. And with the growth of mobile payments, online banking, they have so many choices that they're seeing less of a need to pull out their debit card.
I know, Kimberly, that everyone says that there's all sorts of encryption and things like that, but I'm a scaredy cat, so I still use my debit card because I'm worried about security in mobile banking. What kind of safeguards are there that make it safer than using maybe a debit card?
Well, it is absolutely a legitimate concern, and it's something a lot of people are worried about. We've actually seen cases, especially with peer-to-peer payments, when you're using mobile banking through your phone, sending and receiving payments. We've seen cases of people simply making a mistake, sending money to the wrong person and then not getting it back, or, of course, also examples of fraud. So it's absolutely a legitimate concern. There are steps you can take to lower your risks, however. So, for example, you want to always make sure you're sending money through peer-to-peer payments, in particular, sending money to friends and family and avoiding sending money to strangers when you're buying or selling online, for example, and also double checking the number that you enter, the email address that you enter, because many times the money is lost as a result of a mistake that people make, which is so easy to do.
Right. And credit cards, many of them now offer these cash back awards that makes them more enticing, right?
That's right. Rewards, credit card rewards are something that is so appealing to consumers. You can get cash back, you can get points to put towards travel, and because we've seen so much growth in the credit card rewards that are being offered, consumers are really drawn to that. It's something that they value, and with credit cards, of course, you do have fraud protection, so you don't have to worry about that.
We hope. Kimberly Palmer with NerdWallet. Thanks for joining us tonight.
Thank you.
Coming up, around-the-clock access to doctors when you need them.
I'm Bertha Coombs in Montauk, Long Island. I'll tell you how a New York City startup is trying to take emergency care to the next level with a private ER in New York City and private ambulance service here in the Hamptons. I'll have details coming up.
The EpiPen may soon have some new competition. A unit of Novartis is buying the rights for an epinephrine injector for the emergency treatment of allergic reactions. It is buying the rights from Adamas Pharmaceuticals, which received FDA approval for its injector last year. But the company has been looking for a commercial partner since that point. Shares of Novartis fell, while Adamas, which is a micro-cap stock, soared some 50%.
Imagine having a doctor on demand. Well, that's the idea behind Concierge Medicine and the business model behind a startup that's looking to expand. Now, this service is pricey, but for some, they say it is worth it. Bertha Coombs, as you saw, has the story tonight from Montauk, New York.
When former Olympic skater Evan Lysacek gets migraines in the middle of the night, they're debilitating.
Historically, I would go to the ER because I didn't know where else to go.
When the gold medalist had an attack last month, he went to Priority Private Care.
They saw me and gave me the attention I needed right away.
The Concierge Emergency Room in New York City offers 24-hour access to ER doctors and state-of-the-art imaging.
The only place that has a CAT scan in the city are the hospitals. But the problem is, if you go there in the middle of the night, you are going to wait.
It was co-founder Ben Kruger's dad's idea. A doctor, he wanted a better ER choice for his patients. PPC launched 18 months ago.
We found a radiology center that had all the imaging that we wanted. We're able to partner into it, and that's enabled us to get access to that equipment without having to put a severe amount of CapEx into it.
Annual membership costs between $3,000 and $5,000 per person, but you still need health insurance. For Evan Lysacek, though, it's worth it.
When I would go to the emergency room, the bills were several thousand, and the membership is a few thousand, so it covers one ER visit without the 4-hour wait.
PPC says it now has 1,300 members, but a lot of them this time of year spend time on the beach in the Hamptons on New York's Long Island. So this summer, they added emergency care, including an ambulance equipped with a portable X-ray machine in order to meet demand. Next year, they expect to have a second facility in New York City, as well as a permanent facility out here in the Hamptons. For Nightly Business Report, I'm Bertha Coombs in Montauk, Long Island.
And before we go, a final look at the day on Wall Street. The Dow was up 35 points. NASDAQ advanced 57. The S&P was up 8.
Happy second half.
Yes.
Here we go.
Tomorrow's a half day of trading, by the way.
That's right, it is. And that does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.